This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Welcome back. This is Not Your Advisor with NYU Grad on Thursday, March 27th. Let's jump right into today's session. It was a tricky one on low volume, as usual, as we suspect each day now. I'm going to start at the breadth. I'll just peel the onion, as I usually do. We had 131 new highs on the NYSE versus 341 new lows. 41% advancing versus 56% declining. 69% below the 50-day and 63% below the 200-day. The indices closed at the low. The Dow, NASDAQ, Russell, S&P 500, they all closed at the low, but in the last 15 minutes, because at 3:30-ish, all of the indices were trying to close par with previous close, and we were going to have a nothing burger day. But the last 15 minutes on low volume, we saw selling into the close. That's never a good thing, openings are important, but the close is also very important. Tesla had an odd day. After the tariff news came out yesterday, Tesla was down pre-market with all the car makers, and I had posted that Tesla will be least impacted by the U.S. tariffs because the composition of a Tesla is majority made in the U.S. However, I still suspect Tesla's going to have headwinds internationally as other countries reciprocate these auto tariffs of 25%. And Tesla market share and sales and revenue were falling already in Europe, in China, etc. So I don't think they're going to be out of the woods just yet, but GM, Ford, and Stellantis fell the most today on that tariff news. But Tesla recovered. Well, I shouldn't say recovered. They recovered pre-market, the loss, and then at the open, they started to rally even harder, but they lost all of that bounce. They did close up today 0.4%, but it was on a roller coaster ride. Amazon was up marginally, 0.1%. Apple was up 1%. Microsoft up a nothing burger, 0.15. Meta was down 1.4. Alphabet down 1.8. And NVIDIA down the most, down 2%. So that's not good either. All of the semiconductor index components were also red. That's not good either. There was some news that Microsoft was pulling back their vigor of spend. And we were hearing every other day, remember when, we're going to invest $50 billion in this. We're going to do that for Stargate. We're going to do this at Alphabet. We're going to do this at Meta. Everyone was pledging. They did not sign a contract to say, we guarantee we're going to spend this many $1 billion. They were just pledges. And now Microsoft is walking this back. And there might have been an over purchasing of semiconductors. It's like FOMO, just like trading. Companies like Meta, Apple, they got ahead of themselves potentially and ordered too much. And now they're scaling back their infrastructure rollouts. They're just going to have chips laying around. We shall see. Looking at sector analysis, consumer defensive led the way. Consumer defensive and not on the sector list is precious metals. Those were the most green on my screens. Healthcare was up 0.25%. Basic materials up 0.12%. Consumer cyclical up 0.1%. No biggie here. Leading to the downside, technology.
We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you. They connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to notyouradvisor.com.
And all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not your advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.